Good day, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, the 9th of March, 2023, just after 6:15 p.m. Central Time. So today I was twiddly-dee, twiddly-dum, just doing one of these things with my fingers. I was doing everything I had to clean things out, do whatever, and not trade these markets. I told my clients, no, we don't play this game. And by the end of the day, you saw how deep the break was in the stock market. It could be up that amount tomorrow. You don't know. You have a major set of events hitting you right now. And they set up what the Fed's going to do on March 22nd. You have the jobs report. Are we going to see wobbling? Is it going to be stronger? Is it going to be weaker? And then the CPI data. Today, a warning shot was fired by the New York Fed. They said that their researchers had discovered a flaw in one of their models. And the flaw would have made inflation substantially stickier and higher than they reported for January. And now they're applying that going forward. Be careful here. Remember we talked, is inflation going to be sticky? I think it's going to be very sticky. And they even covered what rents are doing and the idea of how much they're falling and the impact. You might want to read my report tonight because I allude to all that. But you can go to the New York Fed website. I'm sure there'll be something there. It was in a blog that was posted. I read so much, I go through these things like water. But that, to me, caught my attention in a big manner. Let's just go to the chart action. Up until today, what the market had been doing, this is an area chart of closes, is we were fighting at the 39.95 area. Today, you collapsed on that. Now, will we get follow-through? That's going to be the big question. If you get follow-through, then you come in for this low, and if that gives ground, then you're back at the old lows here, 3,600. If the market reverses course, wonderful. This is a close-only chart, not of highs and lows, so tomorrow's going to be super important. Unlike that, this is a bar chart of the current action, and we keep challenging this 39.10 area. You've got a pattern of lower highs, lower lows that was established with today's action. Finally, if you come away from today's action, you didn't have that until today. Let me get rid of this. You had a lower low and a higher high. And what today was, and I'm not surprised, you had an outside day to the downside. An outside day occurs when you take out a prior day's high and low. To the downside means you closed lower. So if you've taken my outside day course, you know the importance of today. I'll leave it at that. Take the course. It's really important. It shows you what you're going to look at for the next 2 days. It's going to be for Friday and Monday. That's how it works on a daily chart. The next 2 days, assuming it's a continuation pattern, if it continues, where could the market be headed? Well, now it's through the 200-day and the 100-day average, so that leaves the Bollinger Band. And that number is currently 38.82, so that's your immediate target. This is the first break that we have had under both numbers, period. Now, do you understand what I just said? You go back further and further. You haven't been under both numbers. So this is an important event. Is it a false move? Is it real? Tomorrow's going to tell the story. Going home, what you have is an oversold market in a downtrend with downside bias going into a major set of reports. When you look at the NASDAQ, you finally did come back, and now you've hit again the 200-day average. Again, the trend is down. Again, an outside day down. If you've taken my outside day course, you're prepared, and general people like you aren't if you didn't take the course. My traders know exactly what the odds are if that's taken out. Same thing in the Dow. Target the lower band, oversold, outside day down. Not so in the Russell. And the Russell has now caved in. So it's under its 100, its 200-day average. It's even under the Bollinger Band. Traders just went to this market and they tossed in the towel. They said, we've tried to support it. We can't. That's the action that is coming there. You have your first move where you're trying to get both of the numbers and stochastics under even the 20 level. If you get it for several days, you embed and you get even more bearish in this market. I wish I could tell you I know what tomorrow's going to do. If you gave me the number, and I don't have it, obviously, of the report, I wouldn't know the emotion that's going to be attached to it. I'm guessing any number over 300,000 in my head will be a sign that labor is still staying very, very strong and not backing off. A number of the 224 close to it. Okay, maybe we're getting demand backing off a little bit. It's not picking up. And under 200, probably going to be considered a friendly number, saying, no, we have seen the peak in this demand part of the cycle. We're losing enough people coming out of manufacturing and tech where the service isn't picking them all up. Okay. To a degree, we saw that in unemployment claims, but then the JOLTS data yesterday didn't show that, and Challenger Gray Christmas didn't show that with the planned layoffs. Still a strong market there. In the 10-year notes, we've had a bear market rally, which is so normal, because you're going to say, and you should say, what the heck are the notes rallying? That means rates are going down, and we're hearing all this. You ever hear the word short covering? Short covering? It means that the bears decided to take their money out of play. That's what I think went on. In the dollar index, you're going to say, well, Ira, if these rates are doing that, shouldn't the dollar rally? Not if you saw the 10-year notes and the others fall. Remember, the 10 and the 30 have not been adding premium. It's the very, very short end. But even here, traders, the smart money says, you guys play it. We know y'all want to be heroes. We'll come in and pick up the pieces afterwards. We'll live to fight another day. That is good defense. By any stretch of the imagination, that's what you want to be at times. You don't want it to be all offense. If you get wrong, how do you get out? This market's going to jump dramatically if the reports at either wing that we're talking about, over 300 or up under 2. In between, I don't know. Probably won't go as crazy. And we don't know if they're going to revise the January numbers of that 517. Have no idea. In the euro, we fell into support. That's all that I know. We went down into the 100-day average in the lower band. But here's what I do know. A week from today, Ms. Lagarde's going to be there raising interest rates 50 basis points. So it just wants to get out of the way of the dollar for the time being. And I think then it will have to live on its own. Is it going to start moving up against the dollar if the dollar doesn't see these big interest rate hikes? Let's assume for a moment that the Fed doesn't get the information they want to raise rates 50 basis points. The market's building in a 50 basis point case. Okay, they go 25. It could be a series of 25. I think the Fed prefers to go 25. I won't be disappointed. Why? They want to see the lag effect. They want to control it. All they hear about in every time they go to Capitol Hill is how wrong they always get it. They were so wrong in the COVID transition, and they'll be wrong this time, putting out, 2.5 million Americans out of work. They're being set up, and it's not lost on them. They're human beings. They don't want to be wrong. They want to be right as can be. They're trying to thread a needle. Would I rather go 50 or 25 to do that? I'd rather go 25 so I can pull back the rein at the right time, or try to. It's like turning an oil tanker. If you've ever seen one in person, your jaw drops. That's how big they are. 5 miles offshore, they're starting to slow down. I mean, they got to figure out how to get to that terminal. What are they going to do? It's got to come in at a certain speed. It's a job. Well, guiding our economy is similar to that, folks. Don't forget it. Then you get to the British pound. We know they want to stop raising interest rates, all right? The market, though, is staying oversold in a bear trend. It's screaming, yeah, it's bearish, but it's too oversold to go short. In Bitcoin, another bank bites the dust. All right, so we saw Silvergate, now SVB, another venture where venture capitalists in California and put their money. The run on the bank has begun there. I think they were down 25% or so just recently. You can see where you're headed down here. And what's happening to all those banks? Around the country, what you don't realize is they've got all this money, and now they got to start paying on deposits. I brought that up in my newsletter over and over. It's going to change the profitability swing of the bank. They were paying nothing. They were paying it to their shareholders, their big dividends. They were giving themselves bonuses and so on. Then they started firing different departments. But now the game is really changing. Now they got to start paying. If you can get 6 months for a T-bill, you can get 5%. Why am I getting nothing on my account? I want 3.5%. I want 4%. I want some number. You think that doesn't change the bottom line? It does. It takes away from what they were earning. And in some of the ratios that have heavily indebted, like the tech companies with those banks, it can create serious problems. Peter Thiel was telling the people he knows to start yanking money out of the banks, different ones. So this one, especially SVB, he's bright. You don't want to get caught in that game. That's the key. You work too hard for your money. But Bitcoin, support should come in something in this area. Did I not tell you I thought this market was going to make a run? Did I not say it when we began the week? I said, when banks tell you on a Friday afternoon, they make a release like Silvergate, that I said, it's never good. It's never good. And boom, you're seeing the impact. And I said, you got to work through it now. How many hits are these cryptos going to take? They're going to take a lot. And by the way, there was a fight today in New York. The Attorney General is calling cryptos, Ether specifically, a security. And the CFTC says no, no, no. So a big one is about to happen. In my experience, the Fed always wins. When you take a look at Brent versus crude, well, first, let's just look at this one. Higher high, lower low. Let me come back here. The Brent versus crude. You got it maybe a little too cheap. You're getting a bounce, but the fact that you're under and staying under the 18-day average tells me that the contraction between the two is underway. You can see how this weighs. Understand that if interest rates go up, it's a tax on everybody. And that tax takes away some of your spending money in many different ways. And, people today are loaded up on credit card debt. They're loaded up with their credit cards. The companies that are going to buy things, you want to go out and get something, you got to finance it short term. Your costs are going up. It's going to drive prices which way? Well, it's two parts. The cost of the good goes up. Is demand still going to be there? So you fight the two, and you got to see which one wins out. For the time being, a lot of pressure on the crude, be it WTI and Brent. This is the strength. What happens if the dollar takes off? This gets more bearish right away. Gasoline. I feel good that I told my clients, nah, you don't do it yet. Overbought, you wait. And I went through in my detail this morning in my subscriber, explaining dollar risks. That's something that you have to understand. I teach in every one of my morning videos. And in it, I go through, here's how much money I think that my research says you don't risk beyond if it's not an embedded trade. And there is a number, and I break it down into actually 5 categories. And when you're beyond that number, which you were, you don't make the trade. It's one of the filters. It's no different than a slow stochastic reading or a Bollinger Band or a moving averages not lined up or the swing line. Money management has to come into every trade. In the nat gas, I like the short side temporarily. Can you fall through here and get back to 234 before you get over this number up there of the 285? That's what I think the market is fighting to do. We'll see if it can actually do it. So you heard me talk about the research. I want to be clear. We're going to be taking tomorrow's report and applying it across the board. Whatever you're trading, you're going to hear us writing about it. We'll be talking about it. When I say here, if you get our platform, our trading platform, we're talking on it during the day. You're getting throughout the day market analysis. I don't care if it's energies, the soft commodities, the grains, the financial markets. Tomorrow's a monster day because it impacts the dollar, which impacts everything else here, including the financial markets. Very, very important. So how do you get all this? It's simple. You can just move your cursor to the top. There'll be an icon. Click it. You'll be into the free area. Sign up for this information that you're getting right here. It costs you nothing. You can call my staff. They'll work with you. You can just go to the website at iraepstein.com under free offers. I'm Ira. Better get the education on those outside days. It's under our education section under outside days course. Take care.